I want to begin by talking about what I've heard from my relatives in China. Now, they've said, yes, there is some news about Evergrande. It's about to go under, something like that. But that's all they hear. That's the government suppressing the news. But they have actually said something really interesting. They said that there's another company that might be going under. And that company is Country Garden, the #1 biggest real estate company in China. And I'll go into a little bit more detail about how these real estate companies are structured within China. But this is an indication that the worst may be yet to come. I want to also elaborate on what I mean by contagion effects. The best way to explain it is with, I suppose, a virus. When a virus enters the system, it spreads in a very sort of gentle slope up, right? It's a linear fashion, it's a linear function, or at least it looks that way. But then as it grows as a function of itself, as it spreads, it becomes exponential and goes boom. And generally, we only realize that this is an exponential problem when we already see it's gone up and it's out of control. So what we think is in control, can be controlled, we only realize it's out of control when it's too late and it's gone boom. That, I think, may be the situation that's unfolding with Evergrande. Now, I want to backtrack a bit and give you some insight into the backdrop for how we got here in China. The Chinese property market has actually been cooling since 2020. The government instituted some controls on it. They restricted how much property a person could buy. They limited to more or less one property a person. And then on the industry side, they reduced how much money they could borrow. These businesses, these companies could borrow, and so they didn't want them to be over leveraged. That actually was a dampener on the property market. The second thing is, you add on to that, the economy for China has actually not been doing quite well. As you know, COVID has been ravaging the world, and also it's been coming back to China sporadically. So the economy isn't exactly crash hot, and also the prices have been experiencing slight declines. So the cooling property market, the weak economy has actually been leading up to the decline of Evergrande, and that's how we got here. Now, would it be hard to imagine that this is affecting other real estate companies also in China? And would it be hard to imagine that these factors are not going to go away anytime soon? They're still going to be putting pressure on this industry. And then you add on to the fact that after this incident, up until now, the banks are going to make it harder for these companies to borrow money. They're going to increase interest rates. They're going to make it harder for these companies to borrow. And so they're going to find it harder to fund the operations and harder to make sure that they make a profit. And then I want to add on to this. The average Chinese person doesn't really realize this at this point, but there are 1.4 million apartments that are yet to be built by Evergrande. If they go under, there's 1.4 million people, 1.4 million families are going to lose money on this. And then what's going to happen? They'll tell all their friends. Even the media cannot suppress this situation. Now, if you heard that one of the major real estate companies just went under, would you really want to buy property from these real estate companies? Probably not. And the deposit for many of them are 30%. So I think maybe the typical property buyer is going to pull out of the market. And then what happens when they get scared about this real estate market? Well, they're not going to put as many orders in, and then the real estate companies are going to have lower demand and increased interest payments. You add all that up together, and they're going to have a lot of pressure. And then I haven't even talked about how much debt that they have. So I mentioned a bit earlier about Country Garden. Country Garden is the largest real estate company in China, and it has around $260 billion in debt, not that much less than Evergrande. You add $300 billion and you add $260 billion, and you have something over $500 billion. That's $500 billion that the Communist Party needs to fix. And then we're not even talking about all the other dozens, hundreds of real estate companies that are going to face the same issue. This is going to pretty much spiral out of control. I'll say one thing. The communist government is probably starting to realize this, and it's looking at the banks. It's going to try to set firewalls and buffers around the banks, and so that they don't go under, because it's bad enough that the real estate industry goes under, but then you don't want to have the financial banking industry go under. So they're going to start protecting that industry at all costs. This thing is going to get really, really ugly. And then I haven't even finished. With Evergrande alone, they already have thousands of suppliers and contractors that are waiting to be paid. If they don't get paid, they're going to go under. Then you factor in employees. There's over 100,000 employees in Evergrande. What about all the other real estate companies? They've got hundreds and thousands. They've got millions of employees. Those people are going to lose their work. And then what about all the unfinished properties that are yet to be finished? There's a lot of problems happening. And by the way, did I mention the real estate industry, the construction industry is 30% of China's GDP. It's 1/3 of the country. It's the biggest sector. Now, you put all those things together, and also, I didn't quite mention, but this is the second largest economy in the world. This is a major, major problem. So the question is, how much can the communist government actually contain the situation? So is this actually going to be contained within China? Now, if Evergrande is the only bank that goes under, then it's okay. With this chart, it shows the amount of exposure the banks listed on Hong Kong are exposed to Evergrande. It's in single digits. It's not too bad. And then we have other international banks and investment firms, and they only have a fraction of their investments within Evergrande. Naturally, of course, it's only a fraction of all their investments. So that's no problem. But when you have other real estate companies going under, how much of that within the Asian banks is that? And considering the fact that it's about 1/3 of the GDP of China, then you would have a lot of loans on those banks that are related to the real estate and construction industry and that sort of area. And then we're not even talking about a recession in China. So this is a big, big problem. Now, I will say it may be contained. It may be contained. And I'll explain a little bit why. But firstly, if you're liking this video, please feel free to hit the like button. And if you haven't yet, hit the subscribe button. And that makes sure that you'll be on top of the latest videos I make, just like this one. Now, regarding how far it may spread, let's look at it from an investment standpoint. I want to begin by explaining the US as an example. What is the biggest customer? Who is the biggest customer of the US? Well, that's the US. It's not actually China. China is usually the ones that make the stuff. US is the one that consumes the stuff. So US is not going to lose its primary customer, which is fantastic for, I guess. It's also a tragedy because the US isn't making enough things, to be honest. Now, there are still companies in the US such as Apple with its iPhone and Nike and a range of other companies that do send their products and services abroad to China. So they're going to be impacted. So I would invest and allocate my funds accordingly and be careful about that. The other thing I want to talk about is the commodities. Anyone that does have China as a customer is going to be impacted. Australia is going to be impacted because we can see on the iron ore prices that this has already been priced in and been declining for months now. They knew, the Australians, or at least the people in the iron ore market, knew this was already happening. And so Australia is going to take a big hit. And so are other countries that are commodity producers, because real estate takes a lot of materials to make. And a real estate industry that's going to collapse, the world's biggest housing bubble collapsing, that's got tremendous implications on the commodities complex. And we can see copper is one of the few commodities that hasn't been impacted yet as I make this video. It is sitting at highs. It's not budging down yet. You need a lot of copper to make the electrical wiring in the house, so that is going to potentially be impacted. And even the broader commodities complex, which is this index I will show you, it hasn't really fallen. Beware of inflation. I have to say, inflation will keep these prices up. So be careful if you want to trade that. And then finally, I want to talk about USD also, which is my favorite way to play this. US dollar is the best way to protect yourself in a volatile market, on uncertain markets. With the money printing that may be involved with the Chinese government, that's going to reduce the prices of the Chinese currency, and that's going to increase the US dollar. And finally, there are people saying buy the dip. And for me, from what you've just heard, I wouldn't be buying the dip personally. I'll let it play out a bit because I don't think this is an overnight thing. This is more like a Bear Stearns situation, the bank which collapsed in 2007, not Lehman Brothers, but led to Lehman Brothers. This is the Bear Stearns moment, which is more concerning if you think about it because the worst may be yet to come. So this is just beginning. And if we refer to the charts a bit, it's broken major support lines. The 50 moving average has not been broken really since April 2020. It's just been the perfect support, and it's just been broken. We also talk about the trend line that you can see that's going diagonally up. That's broken too. I would say that 99% of the market is looking at these two lines, and 99% of the market knows that it's been broken. So it's an indication that 99%, the majority of the market, also believe or perceive that the dynamics of the stock market has actually changed, especially on the S&P 500, which I'm showing you. So those are the things that you need to look at. But at this point in time, I don't believe the Western financial institutions are going to be severely impacted, or the Western economies, the major world economies are going to be impacted because China is the factory but not the customer. So that's a big, big difference. But you never know because it is the second largest economy in the world and we have no idea how this could spiral out of control. Anyway, if you like that video again, that like button is inviting you to smash. And I thank you for watching. Share. I'll see you in the next one. Bye.